welcome back. I'm the Missing Link, and if you're new here, then welcome to my channel. This is part 4 of a series. Grab the playlist, My Experience with Crypto Mining, if you want to start at the beginning. Brief recap, this series is about my experiment with crypto mining, specifically my experience in trying to make some real money. At the end of the last episode, I had $94 in Bitcoin and was ahead financially by more than $3 Australian, having allowed for all the costs at that time. Yep, that's more than $1 a week of net profit. Yay, I was going so well. Have I managed to retain that rate? Have I deviated or done even better than that? Well, you'll have to listen and watch to find out. I've been investigating a few things over the last few weeks, following my disappointment with Burstcoin. Specifically, I've been looking for alternatives to Burst, starting with Sia Coin Storage and Storj storage hosting. Sia Coin Storage and Storj are two options to lease out my available disk storage capacity to others as a cloud storage offering, and for me to make money in the process. Neither Sia nor Storj sounded like big money spinners, and that's pretty much how it turned out as I looked at them more closely. Both Sia Coin and Storj websites have a frequently asked questions section that describe the profit-making potential of their respective storage services. The basic message for both is, there's no short-term benefit here, but please provide hosting services for the offering so that we can enlarge our network and become more well-known and credible, and there is potential for profit in the future. This reflects the base philosophy of most crypto coins I'm finding. Work to accumulate coins now, and in the future that work will have value once the value of our coins rise. That basic philosophy is fine, and has evidently worked for numerous coins like Bitcoin and Ethereum. But it's not my immediate focus. My immediate focus is to make money now so that I can leverage that early income to make even more money in the future. Therefore, I've decided to put both Sia and Storj aside for the moment. They may have good future potential. They may be valuable to host now, accumulate a few pennies in a few coins, and hope to have them rise in the future. But that's not what I'm doing. Burst is actually still a better bet than either of them at the moment, even though it also has very low income levels. Burst also had a shocking month in July, which to my untrained eye seems to be the result of infighting between those that want to be recognised as the leading development teams. Obviously, I'm in no position to recommend or otherwise Burst, but from reading far and wide across the interwebs, Burst seems to be having a personality-driven crisis of identity. Enough of Burst. I'm also considering some direct investments and trading in crypto coins of various types. There are a number of derivatives out there that seem rather interesting. I still need to do more work to really understand how things like hashing power contracts and smart contracts and loans work. At first glance, some of the offerings being reported and highlighted by the YouTube crypto community positively reek of scam. Looking a bit deeper into things like loan arrangements with daily interest, the reek is even stronger. But the potential on offer is truly tempting. The worst sign of a really dangerous offering, I'd imagine. I'm going to look at these offerings again, though. I will do more on them in the coming weeks. It really doesn't seem like only 2 weeks since my last update. It feels more like a month or two. A few days before my last video, the Bitcoin market had crashed. Doomsday was called. Since then, the Bitcoin price has recovered and even been stable for more than a few days with very low trading volumes as the world crypto coin exchanges sorted themselves out. Bitcoin has split, the original coin retained, and a new coin called Bitcoin Cash has been created. This called for a little fancy footwork for people like me with coins being held in online wallets that were not clear about whether or not we'd be credited with the relevant Bitcoin Cash. I spent way too many hours organising my now several wallets to ensure both Bitcoin and Bitcoin Cash would remain securely in my hands. The Bitcoin Cash has been a nice little bonus though. In addition to mucking about with Sia, hosting and Storj, and trying to understand trading, exchanges and contracts, I've also invested in my mining rig itself. If you remember, I was running a miner PC with a GTX 1070 inside, and was also cheating by using my main PC with its GTX 1080 Ti as a means to help me bootstrap faster. Since then, I've reconfigured my main PC to be running both the GTX cards, the 1070 and the 1080 Ti, and I've brought two AMD RX 580 graphics cards for the miner PC. So I now have 4 cards running over 2 PCs, which is not the most efficient for power, but the current miner PC will only support 3 cards on the motherboard, which is why for the next update I will need to sell the motherboard and get one with more PCIe slots. I choose not to run the 4 graphics cards on my main PC, because that would really exacerbate my cheating, i.e. the criteria I set myself for the experiment, and also because it means I'd need to relocate the PC for space reasons. I just don't want to do that. I like my little setup here with my PC and my dual monitors and whatnot in a desk. I don't want to move it. So with 4 graphics cards instead of 2, I should be doing a lot better than before, yeah? Well, if you remember back in an earlier video, the second one I think, I used an example financial return of $5 per video card on average to calculate my income and target size for the mining rig I will need to build up over time. The average seems to be more like $2.50 per video card at the moment. Why, you ask? A few reasons, I think. Main one seems to be that the difficulty of mining has increased, mostly for the Ethereum that NiceHash mines for me. In addition to that, the exchange rate of the Australian dollar has improved versus the US dollar, making the Australian dollar return lower. And the price of Bitcoin's been a bit up and down and whatnot, a little bit lower than it's been, and it's been down, it's come back up though. Hopefully if the price of Bitcoin improves, then my daily dollar return per card will also improve. We'll find out over the next period, I guess. So, over the 4 cards I'm now running, I'm making only $10 a day. Still maintaining my $300 per month, which is okay, but it's still the 1080 Ti that's slightly propping up the 1070 and the 2x RX 580s. On that basic math, I need to buy another 20 graphics cards in just under 5 months to be able to get my $10,000 target. That target's looking tougher by the day. The 2 graphics cards I've bought are MSI RX 580 Armour 8GB cards and cost me $499 Australian each. As a result, I've overspent my allowance for this experiment. I allowed myself $1,000 in investment funds. I need to make most of that money back now before I can buy any additional cards. Really? I feel another cheat coming on. Maybe if I double down and spend even more, then I can make my money back faster. That's not a symptom of a gambling addiction with crypto coin, is it? No, surely not. No. Those of you that are moderately tech-savvy will also understand that as soon as I go over the 3 cards that my miner PC motherboard supports, I'll need to buy a new motherboard, either replace it to it or in addition to it. The most cost-effective method is almost certainly to replace it, i.e. sell off the one I have to reduce overall costs. While the cost of items like the additional motherboard were not in the earlier financial modelling, those models also assume $600 per card, but I've been able to get the new cards for less than $500 each, and the cost is still dropping, albeit slowly. And the new AMD RX Vega cards are due out in a week or so, and they look quite interesting. So my financial summary page shows I'm down a total of $106 after 5 weeks. How can I be only $106 down, you ask? Didn't I spend $1,000 on graphics cards? Okay, so let me explain the various different viewpoints that I have on my total financial position. First view of the financial model, operational cost. This graph shows the total Bitcoin Cash and Burstcoin income so far. As you can see, it grows week to week to the current level of 217 Australian dollars based on the value of my last income, which was the 1st of August. It also shows the calculated power cost to date, totaling just over $69 so far. I also need to add the cost of depreciation to this chart as an ongoing cost. It's not there at the moment. Depreciation is the week-by-week calculated impact of the declining value of the hardware. The simplest, though not most accurate, way to think about this is the example of buying 2 graphics cards for a total of $1,000 today and planning on selling them in 1 year's time, the end of the experiment. If I assume that in 1 year I will get a total of $500 back for the 2 cards, then they can be said to have reduced in value, i.e. depreciated, by $500 in 12 months. That's $9.62 per week of reduced value, which I need to show on this chart as a cost. I will update to include depreciation cost in the next episode. Based on this operational view, I've made $148 in 5 weeks, i.e. I'm ahead by an average of $30 per week, less the depreciation impact, which is about $10 a week roughly. The other way to look at the total financial position is to estimate what would happen if I closed out of this experiment now and sold everything that I'd bought, including coin that I'd earned. That's why on this spreadsheet tab, you'll see that I've listed the purchase price, the estimated current resale value of everything that I'm officially using for this experiment. The top 4 items are the minor PC. Graphics card, power, motherboard and case. Assumed starting value of $1,000. Assumed current sale price of the same as $1,000, but the sale price will reduce over time. The most recent purchase at $1,012.50 is the 2 new graphics cards, including postage. You will note that even though I paid $499 plus postage and handling for each of these, I've assumed that I will only be able to get $400 each if I resell them. There's no guarantee these numbers are accurate, of course. The resale numbers, that is. They are an estimate based on my experience and are likely to change pretty quickly. I'll revisit the sale price whenever I think it's appropriate, but at most every 3 months. If your eyes are sharp, you'll probably notice the main thing that determines if I am ahead or behind is the amount of money I could get from selling all the graphics cards. This is my key learning so far, that turning over your existing hardware at minimal loss to get even better and more efficient mining hardware appears to be the real secret of making money here. If you let the resale value of the hardware you have drop too much, then you are screwing over your own profits. For this very reason, I expect all good miners to update to the next generation of AMD graphics cards as fast as they can. By selling the old ones at a good price is just as important. End of week 5. This little project is keeping me entertained. Maybe it's not entertaining as Donald Trump, but it's still entertaining enough for now. Over $200 in my Bitcoin wallet. I haven't actually paid a power bill yet, although I owe it at least $69. If my estimates of the resale value of components is approximately right, then I can still come pretty close to covering all costs so far. It feels like I've been playing this game way too safe so far, though. Maybe I should try something higher risk. I remember the old adage, show me somebody that takes no risk, and I will show you somebody that makes no money. Is it time for more risk to get more reward? What do you people think? Let me know in the comments below. I did say last time that I'm not addicted to the rush of currency market fluctuations, and I'm going to keep telling myself that. Thanks for watching. Keep an eye out for the next episode. I'll catch you on the flip side.